let's take it back to you reading the Joe Fairless syndication book, right? Like why what made you go, you went straight to the capital raising side of the business. Some people want to be an operator, some people may want to be a capital raiser, a deal finder. Like why did you go
Mhm.
straight to capital raising for real estate?
So I think the question for me originally was like multifamily. Coming from a mortgage background, like they made us study these things called like regulation Z, or I forget what they're. I mean, all these regulations that the banking industry forces you to kind of, you can't advertise particular interest rates online. So regulation Z till the I forget what these are called. It's been like 2006, but these regulations prevented you from advertising interest rates. So I kind of had this concept down, like if I become a capital raiser, I can never say, hey, I'm going to offer you 20% returns or offer you anything. But what I can do, which is what I learned from the banking industry, is I can share what I do. Like I can share my business model. So I found this fourplex investor that came into town right after the crash. He went bankrupt in spec homes in San Diego and showed up here with a BK in Phoenix and was just buying a fourplex every other week. I was just like, how are you doing this, man? Like, don't you have a BK? Like, how do you get the financing to take these things down? And he's like, oh, I raise capital for them. So I was like, oh, I think I want to get into that. Is it cool if I follow you around to your different fourplex projects and we can explain to the audience, on YouTube, how you take these down, how you find them, how you negotiate them, like how you become an expert in this field? And he's like, sure. So I created a YouTube channel called the Phoenix Real Estate Investors, which is still there on YouTube, like, I don't know, 15 years later, and still collecting views, interestingly enough, even though it's completely different time. And this was my very first thought leadership platform. So once I posted these ridiculous videos with like rap music in the background about us taking down fourplexes, and we raised 625,000. I'm like, this is too easy. This is stupid. I'm doing the most ridiculous videos about us taking down fourplexes and we still raised 600,000. So I was like, dude, there's got to be something to this, right? Is the only secret just going and finding a real estate partner that's good at what he does and sharing that with the world? And all of a sudden money starts coming in. It's a little bit slower than that. So I'm kind of making it out to be easier than it is. But essentially, it's not too complicated. If you can find somebody that's good at the things that you want to be good at, and you can broadcast their message on podcast, on social media, wherever, whatever your platform is, it can be an avenue for a regular Joe like me to start raising capital and participate in the acquisitions and partnership and ownership of multifamily real estate. And I think that's kind of how I ended up here.
And I think the capital raising is something that I think a lot of people are afraid of getting into real estate.
Yeah.
Because raising money, hundreds of thousands of dollars or millions of dollars, is a lot of responsibility. But I think, for me, I realized early on in my career too, is that, eventually, if you really want to do a lot of deals in the real estate space, at some point you're going to have to raise capital. You're going to run out of money trying to do all of the deals by yourself.
Right.
And you're a real estate junkie like myself. I love doing real estate deals. And so, what were like the main strategies that you talked a little bit about platform building, but what were the main strategies that you've used so far in your real estate business to raise capital?
Well, what I stumbled upon originally with my first interview-based thought leadership platform was that you can promote other people. Later on, when I started the show, I was asking people, like I've raised money from joint venture guys to take down little fourplexes, but this is a whole different ball game. This is like syndication. We're like regulated as a security and we have to file for exemption so that we can be thought of and treated as differently than a Coca-Cola stock company. But I mean, what I've learned over the show, and it's been a long time kind of learning, it's been about 3 years, is that raising from limited partners is an incredibly different style of capital raising than raising from joint venture partners. And it requires a lot of nurturing and education and incredibly detail-oriented communication and consistent, ongoing, forever, never-ending communication with your investors. And this is kind of what I've learned. And when I came onto my first company, they're just like, "Where's the capital? Where's the capital?" And I'm just like, "Well, dude, like this is a long process." So I couldn't raise the money as fast as they wanted me to. So I found a hack and a shortcut to raising money quickly, which is this thing called co-GPs. In other words, taking somebody that's already got an investor database and they are looking to partner with an experienced operator, but they don't want to be operators themselves in some cases. Sometimes they do, sometimes they don't. But they're looking for their next level up, their GP card, their general partnership card. Like, I want to be an owner operator. The way to do that is to partner with somebody that's already done it. And, you know, this is how I raised, I think, $500,000 for the Tucson deal. And then another chunk of money, another 400 some odd money for this. It was a hotel development or conversion, better said, into a multifamily property. And then right in the middle of that capital raise, I was like, I only have access to certain kind of little deals here in Arizona. I want to self-actualize and grow into something bigger. So I left that and my GP position in that capital raise to go and launch a fund. And it's just been a crazy ride ever since, man. You know, like we've raised money for the DeRosa Group and Robert Beardsley and Abel Pacheco. And some of these guys, like Abel actually raises for some of our deals. And it's just been a really crazy journey, man.
Yeah.
So it's been a lot of fun.
Yeah. I think there's a lot of opportunity in the real estate space to be on the co-GP side, but just the capital raising side.
So I don't know. I mean, the answer to your question is like, how did I get into the capital raising or why did I select it? I think I stumbled upon it, honestly. I had some interest in capital raising. I figured this one particular thing in my mind was like, if I can learn how to raise money, my services will be in demand for the rest of my life. Because I always thought that, like,
now, why do you think that is? Let's put a pin there.
Because it's the hardest part, I think. I mean, in my personal opinion, number one, I think raising capital is a separate and distinct business than owning and operating and acquiring real estate assets. So, like, when you merge the capital raising piece with the acquisitions piece, then magic starts to happen. And if you can take that skill of learning how to master raising capital, you can go all kinds of places. You can partner with other syndicators. Maybe at some point in my journey, I'll start raising for other things like joint venture capital or, you know, who knows, like IPOs or angel investing or businesses and branding and car washes and stuff that has nothing to do with real estate. But that skill can be translated into a lot of areas. Granted, one thing that you got to know is, like, in order to raise capital for any specific thing, before you can do that, you have to educate and nurture an audience about that specific thing. So because I have the show, people like from Pakistan and different places of the world, they're just like, hey, Mr. Capital Raiser, you're the guy that raises capital. Like, send your check here. You know, we got this golf course development. And I'm just like, dude, my audience doesn't know anything about golf course. And they certainly don't know anything about investing anywhere else in the world other than the United States. So you got to educate and nurture people in a specific thing and even sub niche that down, right? Because you have A class guys, you have B class guys, you have C class or workforce housing guys, you have value add guys, you have assisted living guys, you have hotel guys, you have development guys. I mean, you can't raise capital for all of it. You have to educate and nurture a specific audience and explain to them why it makes sense to do one specific thing, at least when you're starting out. I think at some point you get so good that people are just like, man, you are world-class operator, world-class capital guy. Like, I don't care what you invest in. Here's my money. And at that point you can start a blind pool. And I've interviewed plenty of people that have gotten to that stage. Like Vinny Chopra comes to mind and a bunch of other guys that are just like, hey, we're going to put assisted living and hotels and development and value add all into one funding vehicle. You know, like, we'll diversify your your 50,000 or $1 million or whatever it is that you invest into all of these deals. But man, for somebody like me that's kind of starting out, like I can't do that. I have to pick one specific thing, educate and nurture people on this particular topic, make friends with them over long periods of time, and then perhaps they will kind of say, Ruben, you know, I've been watching you for a couple years. I'll go ahead and be interested in having a conversation with you about investing into whatever it is that I'm doing, which in my case is build to rent subdivision syndications.
That's a great way to put that, because the nurturing aspect, I think, is one of the most important parts of capital raising too. You know, when you have people who are coming into your database, people who are interested in investing, utilizing the strategies from the email marketing perspective, or just those touch points that keep your audience engaged. I think that's the most important part, right? You want to send out content. You want to push content to your audience, people who are interested in you and interested in investing with you, out to them and keep them engaged into the specific niche or the investment that they're interested in too, right? Because some folks don't want to be in a development deal. Some folks just want to be in a property where they get, you know, cash flow on a quarterly, a monthly basis. And then you have
most people are more like, they prefer that actually.
Yeah. Because I mean, in for the case of development is obviously, you know, more risky, right?
It has a different risk profile. It certainly does.
Exactly. And so the cash flow on that is probably more kicked down the road, you know, 1 to 2 years, let's say, for example. You know, and so your investors are probably not going to see any money until down the road, but the risk is also in line with the return as well in development, as opposed to, you know, let's say a value add multifamily acquisitions.
Yeah,
you know?
man.
So I think understanding your audience and understanding exactly, you know, what they want is really important when you're bringing deals to your network as well. One of the things that you touched on as well was also about the importance of this of having a skill of money raising, because in this business, just because you have a good deal, it doesn't mean that the money is automatically going to
never
come.
Actually.
You know, people told me this a lot when I started in real estate. You know, if you have a good deal, the money would come. I've never had a great deal and money just showed up at my doorstep. Right. So I think if you're able to master the art of capital raising, you can really almost always have a job in real estate, one, and then two, be able to create your own destiny. Right. So I think, you know, those are really two really good, important points.
You can't raise money today from people that you didn't talk to yesterday. It's an incredibly uphill battle. So like if you find a deal and then expect the money to come, just like you said, this is a common misconception and myth in the space that, oh, I'll just find the greatest deal and the money will come. That is absolutely not the case. You have to go through this process that everybody else also, that's a painful process, which is educating, nurturing people before they will ever do business with you. And, you know, that takes a little bit of time.
Yeah, absolutely. So I think did you mention that you started off partnering in syndications and then you went off into the build to rent space?
First fourplexes, then heavy lift syndications. Then my partner, who's a fund manager, brought me on board with him, and he was doing both, right? So our business at Legacy Acquisitions kind of has two branches. One where we're capital raisers. So we either do co-GP relationships, or sometimes we create a fund that strokes a limited partner check into somebody else's syndication. But either way, half of our business raises capital for other syndicators, and the other half, we're actually owner operators with a vertically integrated division of our company that specializes in the construction. So we don't hire GCs to do our stuff. I mean, the GCs are actually GPs. They're integrated partners. So they have a different kind of mindset around the development, and they handle that side of the business, which I am no expert at, even though I'm learning more and more about the development side. Like, I don't know how to go and find a 30-acre piece of land and determine whether or not it's, you know, like perfectly leveled. And if it's in a particular city where we know that the zoning is going to be beneficial and that the timelines for entitlements is going to be rapid versus, you know, in a big city like Phoenix, it's going to take years just to get through the entitlement stage. So our guys are, they're two pieces, right? The development piece and the acquisitions, and they work together, and then they need a capital infusion. So that's where me and my partners at Legacy, we bring the capital, and we are all together general partners in these syndications or joint venture kind of agreements where we all own this, and then we bring in capital from other people to help provide the opportunity. And it's very lucrative, man. But like you said, dude, I think here's what I've learned too, man, is like a lot of multifamily investors, especially beginning investors, they're like, hey, I want to get into multifamily to create generational wealth. But they don't know how to do it. So they're typically introduced by their limited partner friends. And what do the LPs, the trendy ones, typically do? Oh, well, they go with the big guy marketer, syndicator guys that are really good at branding, but aren't necessarily the best syndicators on the planet. And then they put their money into a 3 to 5 year deal, and they're essentially just flipping property and not creating generational wealth. I've thought about this philosophy a little bit. It doesn't make sense for them to do that if they're, actually trying to create generational wealth. But the reality is that's exactly what they're doing, because they're accelerating their capital gain, their entire capital, by putting it into something that makes a lot of money very quickly. And then they redeploy that over and over, hopefully using 1031 exchanges or some kind of tax favored vehicle, like, enhanced qualified retirement plans, or maybe even for the super sophisticated people, they got infinite banking insurance policies that they invest a bunch of money into and then borrow against it, and then put that into a real estate syndication or some kind of investment, whether that's a business, et cetera, et cetera. So, I mean, there's just all these strategies, man. It's just a really fun game that it's really kind of sad that the American public doesn't know that these things exist, right? Because like these syndicators and these institutional level investments, they're done by people that are just regular dudes that you went to high school with. They're not like incredibly intellectually sophisticated more than you are or the general human being is. They just decided to get into something that is called wealth creation, and their vehicle to do this is commercial real estate syndication.
Yeah. I totally agree. Being able to provide opportunities to people who really don't see these deals, they don't see, they don't get an opportunity to participate in a 100-unit, multifamily deal, but I think, that's the beauty of syndications and the beauty of the recent laws that were created a few years ago that allowed regular people to invest with people like you, on deals that make sense for them and allow them to absorb really great tax benefits as well. So it's
Yannick,
just an amazing time.
It's our duty and moral imperative to go out. And this is why I commend you for starting a podcast, is because the general public doesn't know that private placements exist, and they can't just go to the street corner and find syndicators and multifamily fund managers hanging out. Like, you have to know where to find these guys, but the access is available and the education is available primarily through podcasts. I think is one of the greatest platforms to educate the general public, not just them, but like even wealthy business owners, sports athletes, guys that started an e-commerce or some kind of tech company and like became very rich and then had really big tax bills. And they're looking for a way to, like, instead of paying, 50% of what I made to the government, how can I invest into real estate and save that money? Well, go hang out with dudes like Yannick that know what they're talking about in terms of investing and parking your money into very tax favored shelters. And hopefully you can provide them with a little bit of extra knowledge too, where you're getting people into offshore hybrid investment trust. And, once again, the EQRPs and the infinite banking policies, if they can master some of this, like they become like family office level, like, the multimillionaire guys, they don't just like do whatever with their money. They use very sophisticated strategies for wealth preservation and capital accumulation. So this is just a really fun topic, man. And I commend you for taking the initiative to go out and educate the public and make them understand that this is something that's actually accessible. These institutional investment grade vehicles and commercial real estate syndications are available to the entire world, not just the Americans, but like people from Japan and Australia, they're just like, man, I want to invest in real estate in the United States. And, but they just don't know how to do it. Or maybe they've looked into it. And for us to be exposing the rest of the world and the entrepreneurs and the professional athletes and, the guys that have created mega companies that are looking to do something with their money, this is the way to do it, man. Like real estate syndication comes with all kinds of benefits.
Absolutely. Totally. And I think part of it has to do, as you mentioned, the podcasting, but just, technology and the way that we're interconnected too, right? Because I think if this thing was out, let's say in 2000, it'll be hard to get the word out, about all the laws and opportunities for people to invest in someone's deal all the way, like you said, maybe from a Japan in the US, right? Just a regular working class, person. So, it's just a really good time to be an investor because you have so many opportunities out here that can seriously create the cash flow that you want and the generational wealth that you wish to create. So I want to pivot and really talk about, why build to rent? I think build to rent is one of those strategies where we're seeing a ton of people, or rather a ton of institutions or private equity capital go into built to rent instead of multifamily. So what are the opportunities in the built to rent space and why are you investing in them today?
Back in the day in 2009, 2010, there were a lot of people that wanted to buy big portfolios of these things. Back then they were called bulk REO packages. So all these banks that foreclosed on like millions of houses across the country, and they would sell these chunks of houses to these people that had mega amounts of bucks and wanted stabilized real assets, not, like stuff that you can't touch. And the problem that they ended up having is like these institutional players and guys that had mega bucks would buy all of these portfolios of houses, but they were like scatter complex portfolios, right? So you couldn't property manage them. So they loved having the asset, but they really struggled with the property management side. So over time, there was, even before the crash, there was people starting to get into spec homes and like building tracts. And typically their model was like, we'll just build a bunch of homes and then we'll sell them individually to people. But these institutional players were like, man, I want in on that action. So what started happening is that as these builders of subdivisions started getting bigger and bigger, they started realizing that they could actually, instead of designing their subdivisions to sell individually to single buyers, they could probably build the thing out, rent it as it's being built. Once it's completely stabilized, sell the entire thing off without, 288 or however many number of real estate commissions that you have to pay. Just sell it off to one individual buyer, and there's billions of dollars of money that are looking for these types of portfolios where they can property manage everything in a cash flowing stabilized asset with one property manager and one leasing agent right on site. It's like what we call horizontal multifamily, right? So a lot of people, when they think of multifamily, they think of a bunch of buildings, and for the same reasons, they like having, the ability of scale, to have everything in one place. It's just one roof. And this is kind of different. We call it horizontal multifamily because it's essentially one huge multifamily property. But instead of being on balconies with no backyards, like you actually have a doggy door, you got a fence in the backyard, you got a driveway. It feels more like a home. And, there's so many indicators and trends that are pushing towards build to rent being an exploding trend over other commercial real estate, including multifamily syndications. Like the fact that interest rates are going up and people are having a harder time buying property. So that's causing the prices of houses to go down. And who's going to buy a property when the house prices are going down? They're going to look at this and like cancel their contract and say, hey, if I wait 6 months or a year, maybe I can buy this property for $50,000 less than what's going on right now in the, in the upcoming market. It hasn't even really taken effect yet, but I foresee that this is going to happen. So what do they do in the meantime? They don't want to go live in a third story apartment building. They still want to have that home experience. So where are they going to go? They're going to rent from somebody like me that's got a built to rent subdivision. and it's going to increase the ability for us to make money over time. So while the multifamily industry, I think, is, here's what I've been hearing anyways, is that we're having harder and harder times raising capital because a lot of people are very concerned about what's going on with inflation. It's harder to make multifamily, big 300 unit apartment complex pencil because the rates are higher than they were just a year ago. And we don't even know what's going to happen over the next rate. So there's kind of like an easing off of this kind of people that are playing in multifamily, or I should say the limited partners that are playing in multifamily, and they're just kind of like waiting. In the meantime, like build to rent is exploding because there's all these things. It's more lucrative. So it's just a lot of fun. I would say that that's why, like I'm starting to look at it a lot closer. And instead of raising capital for other multifamily value add guys, we're kind of doubling down and saying, hey, why don't we become the build to rent guys? Let's have people come to us and, like they're going to make a lot more money. Not only the capital raisers that become part owners of the funds and syndications that we're doing in the build to rent space, but the limited partners on these 506C exemption syndications are going to be able to double their money in like 36 months. Right. And
Yeah.
Across the industry average, people in multifamily can typically invest, or I should say, double your money in about 5 years. There's some guys like here in Phoenix, like the Zach Haptonstall guys at Rise 48, they can double your money like in 2 years. They're absurd, but it's very untypical to find that kind of play. So if you can diversify into a couple things, right? So because it's been getting harder and harder to make deals pencil in the value add space. People are moving into assisted living, student housing, senior living, development, heavy lift. But what we ended up choosing was, build to rent development, which has been incredible strategy of luck that we kind of just happened, through our networking. We came across some developers that were really good at what they did, and they just needed some capital. And we looked at their underwriting and what they were trying to do, and we're just like, geez, man, this is set to explode. Let's get in on this and let's ride the wave.
Yeah. I think it's in this time where we are today, we're talking August 2022. It is the dynamics, the supply and demand. First and foremost, the supply and demand dynamics for housing is just insane. Mm-hmm. And if I was an investor in the real estate space, focused on residential housing, just residential housing, it is one of the best runways that I'm seeing right now in the real estate space from a forecasting perspective on demand, right? Housing has just gotten, expensive. Rates are going up. People are still interested in, looking for single family housing because obviously due to the pandemic, right? There was a huge migration trend outside of inner cores out into housing. But I think right now is a great time to look at those opportunities also because there's an influx of institutional capital looking for real estate for single family rentals, right? And I think, a lot of times when we take a look at markets, when we take a look at where's the money flowing, we start to look at the institutional guys and see what they're doing first, right? Because if we have a bunch of institutional capital that's flooding into a market, I mean, they have tons of hundreds of thousands of dollars behind data that allow them to drive their decision making too. And when you add that couple with the trends in the market, I mean, I think, build to rent is just a phenomenal space to invest in. What and I think you touched on the yields as well, right? I mean,
I didn't touch on that, and I'm not the right person to talk about that. I don't really spend time in that kind of mindset, although that's exactly why a lot of these guys, they're after yield. But what I was going to say is that, you mentioned it, is that there's lots of money looking to park it in, from the institutions into build to rent. I don't know if you ever heard of Neil Bawa. He's also referred to as the mad scientist of multifamily. He spends a lot of time in development, and I watched the webinar with him recently. He's talking about these billions and billions and billions of dollars of institutions and REITs and all these kind of like family offices, people that are trying to park their money in build to rent. And the demand is so huge that like us little mom and pop, build to rent subdivision syndicators, we can only provide 2% of what they have money ready to buy this product for.
Yeah.
So it's just, I mean, there's incredible demand from the institutions to purchase these kind of properties. So it's just for that reason as well. It's a great time to get into this space.
Yeah. Yeah. Totally agree. So on the topic of your fund, if someone is looking to create a fund,
Yeah,
I have never
this is
created
a
a
good
fund
topic.
yet. All the stuff that we are doing right now is 506B. But how do you create your own real estate fund?
Yeah. So I wish there was a handbook that taught this, but my number one recommendation to any limited partner before they invest with some kind of syndicator is like, go talk to 10 syndicators. Well, it's the same thing with creating your own fund, right? You should go talk to at least 10 syndication attorneys on like what structure is available for you to do it, right? Because I think, people can start specific purpose vehicles. They can create blind pool funds. They can do some kind of a hybrid in between, which I refer to as a series LLC, or some people call them a deal by deal segregated fund, where they can look at your private placement memorandum and see your deal before they decide to invest in it. But if they do invest in it, they can choose to continue to diversify in your fund into multiple deals or not. And so this is a really creative strategy, but like, where do you get advice to even learn about this? Well, one place is the Capital Raisers show. But before you go off and say to yourself, hey, I want to raise this fund so that way the money will just be there when I'm ready to take down deals, that's not the reality of it. Like, you have to do the same process as every other syndicator. You have to build, educate, nurture, and sustain a communication level that's very high with your investors over long periods of time. But you want to talk to what I refer to as a business fund architecture consultant, because if you go to a syndication attorney and say, hey, I want to create a fund, they're going to write the docs for you, but they're not going to analyze your business and look at your capacity to raise capital and decide for you or give you advice on whether or not you're even in a situation where you can raise capital. So I recommend talking to guys like Joel Block. Man, there's a bunch of people. Ike Mutabana, and I'm forgetting one of the most important names. Anyways, like, you want to talk to somebody that is not just going to write docs for you, but that's actually going to look at your business model, help you understand, how to distribute the money to your investors through K1s, and they're going to analyze whether or not your idea makes even sense before you talk to a syndicator. So I recommend a little bit of that. And if you want to, get on a call with me, like, I don't even care if you invest with me. If you want to launch a fund, like, come talk to me. I'll put you in the hands of the right people that can help you create your own fund for whatever it is that you want to do. Because I've come across enough people that are just like either scammers, or they don't know what they're talking about, or their business model is on making the money to put you in a fund, or the attorneys, a lot of times they'll overcharge you or not even look at what you're trying to do, and help you analyze whether it makes sense to do what you're trying to do. They're just trying to protect you and, get paid for creating legal docs for you, but that doesn't help you with your business. So reach out to me. I mean, I don't care if you do business with me or not. I think it's really important for people to have access to this knowledge. And like I said earlier, there's no handbook. There's no like place where you can just get educated on how to create a fund, because the only way that you can do it is by talking to different lawyers. And every time that you talk to a lawyer, they're going to tell you something different. Every single attorney does it a little bit differently. So how do you dissect all of this knowledge that's floating around there from different attorneys? Well, you just got to talk to as many of them as possible, and other people that are either fund managers themselves and or these fund architecture consultants, or people like me. I'm not a lawyer, by the way. But if you come talk to me, I'll put you in contact with Joel Block and some of these other guys they're pretty amazing at helping you determine what kind of fund is right for you. Oh, and there's the other part too, man. The administration of your fund, right? So there's got to be distributions. Like, how do you manage that? Like, especially if you're not an accountant, do you like go hire some regular dude off the streets, the CPA? They don't know what the hell they're doing. You need special systems. And the guys at avestor.com, and there's a couple other places that charge even more than they do, they can help you create a platform. So as you're raising capital, people can see what you're doing, and then distributions can be all done through this thing so that you're not driving yourself mad, like with the with the acquiring of capital, the putting it into a portal, the giving them access to see what's going on with the deal through these new technological syndication programs that, everybody has to have these days, because, like the old school way of doing business doesn't exist anymore. You have to have a portal where, your partners, your limited partners are like up at 3 a.m. in their underwear and they can see exactly what's going on in the property. They can't just rely to pick up the phone because, as syndicators, we're so busy. We can take those calls, but it can be challenging depending on how big you get to have access to your limited partners. So you want to get in with the right sweet spot, right? Somebody that's got the technology, but that can still pick up the phone with you. Because as people scale, they stop engaging on social media. They're just too busy. So for me, I think the scaling guy that's got about 2,000 units or somewhere in that range, like you don't want to start with somebody that's got 100 units or less. And you may not want to do like the Grant Cardone, where they have like $1 billion of assets under management and they can't talk to you on the phone anymore. So find that sweet spot for whatever that is for you.
Yeah, that's great golden nuggets there. Finding good professionals or great professionals who can actually not only give you great advice but also help you in your business. There's a lot of professionals out there that would just be happy with taking your money and moving and pushing papers along, but that doesn't help you move your business forward, right? There are a lot of things that people invest in different asset classes, and people have different goals and objectives and things that they want to do in the future. And so, getting someone who can help you get to that level, 100% great advice. So, Ruben, let me ask you a question. Tell me a time in this journey where you felt stuck and frustrated, and maybe it was a breakthrough moment for you, where you may have had to, develop systems, or, it was a real estate deal that you had to get past. Maybe some of our listeners are going through the same struggle today. How did you get through maybe a breaking moment or a struggle that you've had in this journey?
I'm not sure that everybody will be able to relate with this, because they think that creating a fund is a little bit outside of their capacity and their reach. I'll tell you one thing, like starting a fund and raising capital in a fund, there's people that do their very first capital raise in a fund. So it is possible. But when I was with my last company, I had a salary. I was a capital raiser. I could participate as a GP in deals that I raised money for. And then when I decided to leave to kind of grow my wings, it was probably very terrifying for me in terms of like, I felt like a loser. I was just like, oh, I don't know, like, who am I going to hire to be my syndication attorney? Where am I going to get the money for this? How am I going to create my own brand? How am I going to do the automations? How am I going to do all of this? I have no partners. Like, what am I going to do? Yes, I can find great syndicators, but like managing my own investors, I don't have the systems. It's very terrifying to do that. So the fast track to be able to break through this kind of a setback or, situational place where you are trying to grow but don't know how, is to go find somebody, and this probably sounds easier than it is. Go find somebody that's already doing exactly what you are doing, and hopefully you have created something, some brand or some recognition for yourself, or some value add proposition that you can provide for some sponsor, and then just go latch on with that sponsor who's already good at exactly the things that you want to do. I highly recommend, if you want to get into multifamily syndication, like don't do it by yourself. Like go partner with somebody that's got incredible amounts of experience doing it. And same thing for fund managers. If you want to become a fund manager, don't just launch a fund like not knowing what you're doing. Like go launch a fund with somebody that's already launched funds. Be a partner with them, provide value for them, whether that's automations, marketing, capital raising, or whatever it is they need. And, ride their coattails. Let them teach you the business. Like don't try to do it by yourself. This is a team sport, ladies and gentlemen. For anybody that's out there that wants to do this, don't hang out with rookies. Go and partner with somebody that can help you along the way. That is the key to this, business and to creating success in this business.
100%. When I started off in this business, I thought that I can do it all by myself.
Right.
And then I started, underwriting deals, trying to raise money, trying to put together a team, trying to find contractors, trying to find this, that, and the third. And so you hit it 100% on the nail. This business is a team sport, and real estate is no exception, is what I like to say. And so if you can find someone who is doing exactly what you're doing, I mean, it can accelerate your success, 1,000 miles per hour, and also I like to say, if you're hanging around 4 rich people, you're going to be the 5th rich one, right?
Yeah.
From just being around them, soaking up all of the knowledge. And I mean, success, just leaves clues.
I need to go find like 5 skinny people to hang out with, because hopefully they can turn me into a skinny guy.
Hey, the same thing applies. So Ruben, you've been on this interesting journey, right? If you had to start it all over again, what would you do differently that you think would contribute to your success?
I don't think I would do anything differently, man. It's not that there was not corrections that could have been made, but like everything that you go through is actually God planned and designed in such a way so that you can become the person that you become through those trials and tribulations. So I wouldn't change. I mean, I wouldn't risk being a different human being today by fixing it. It could lead you into a whole different path where, if things were easier, or if I didn't struggle, it's kind of like the butterfly that like has to struggle to get itself out of the cocoon. And, like you want to, I've heard this kind of metaphor where you want to cut the cocoon open and let the butterfly come out and fly. But the reality is, if it doesn't struggle, it won't be strong enough to fly. So, like there shouldn't be, I don't think, a situation where you go back in history and say, man, I wish I could have done this thing differently. Maybe, no, man, just let yourself go through the process, always be learning. And I don't think that I would change a thing.
Yeah. Certainly, your struggles, I think, is what builds a lot of character in this entrepreneurial journey, right? Things are never going to go 100% as planned, but, being able to say I survived some of the scars and having that peace within that struggle is something to be happy about.
One piece of advice I would have given myself, though, is like, don't compare yourself to others, right? So like I know some people that were coming up at the same time that I was, and they grew their business way quicker. And like, I was like, well, I mean, when I compared myself to them, it deflated my self-image of myself. I'm just like, how come I'm not as good as them? Like, they're no better than me. Like, do I just suck at this business? And I think we have a tendency to do that. Like, I would just like try to put a calming voice in my own ear and say, hey, man, the process that you're going to go through is exactly the process that you need to go through. Don't compare yourself to others. Compare yourself to who you were 12 months ago. And, as long as you focus on your own personal path and growth in your journey, instead of comparing yourself to others, I think that would have helped me stress a lot less, honestly.
Yeah. I think that's really good advice. In the world of social media, exactly, we like to compare ourselves. That's kind of the world that we're in. It's easy to see, who's doing what, as opposed to where it was, maybe 10, 15 years ago. Right. So I think the psychology of that, of just staying in your lane, running your own race, is a part of your journey. Right. And just realizing that, hey, everyone is going to mature at different levels in their journey. Everyone is going to hit certain breaks at certain times, but as long as you stay on the track and just focus on that end goal, 100% you'll get to it. So last question, what's your secret sauce for your success today? What's your secret sauce?
So for me, dude, I'm just I love going into spiritual kind of books and getting advice from guys like Wayne Dyer and Deepak Chopra. And, even on the peak performance side, I'm a big fan of Napoleon Hill and Tony Robbins and those types of guys. So like surrounding yourself with that kind of material and people that like that material has been a huge component of my success, and kind of like my go-to when I'm like stressed out. Like if I can, especially when I'm super stressed out, if I could just turn on a disc with Wayne Dyer on there, dude, his voice just soothes me. So I would say, like, if you can find something that calms you down, because we all go through this, right? Like it's a stressful business. If you can find something that can ground you and level you and kind of get you back into balance and realignment and calmness and peace and attraction and abundance versus, like scarcity and fear and like like hatred and hunger and envy. Like you want to spend your energy levels in the places that are high energy versus, like go into these kind of batter, worse emotions or whatnot. I don't know if I explained that correctly or used, eloquently explained it, but essentially if you can find something that calms you down, man, go to it.
Yeah. Yeah. I think everyone, including myself, can use that, right? This business is very stressful at times, depending on, what role you play in the business. Some people are, passive, LP investors. Some people are active investors, but having that peace at the end of the day is something that I definitely myself need to work on. So
man,
Ruben,
I gotta say this though, dude. If you're this good before you haven't even launched your podcast, dude, you're going to be a supremely successful podcaster, man. Congratulations, dude. You are a really good host.
I really appreciate that. I really appreciate it. So, Ruben, talk about your capital raising show and how listeners can follow you, what you're doing, your deals, everything about your company.
Yeah, typically, well, my company and my podcast are separate, right? So you can check out our offerings at legacyacquisitions.com. But my show, I think maybe more of the audience will be interested in that. Go to capitalraisershow.com or your favorite podcast platform. We're going on to season 3. The first season was all about learning how to raise capital from limited partners. The second season was about, let's talk to fund managers and ask them how they created funds and what are fund structures and what do you need to know about creating your own fund. And season 3, which is about to launch on August 30th, is going to be more like ultra rich people hanging out with family offices. My new partner, Richard C. Wilson, on the Capital Raiser Show, has got a company called the Family Office Club. So he's going to be providing me some guests that are like super mega ultra wealthy institutions and family offices. And I'm going to be very interested to explore, when it makes sense to, instead of raising money from 100 limited partners to raise, $10 million, what if you got all that money from just one dude? And what would that do to make you scale? And, there's going to be some pains to do that. Like, where do you even find these guys? But it's going to be fun exploring that. So if you're interested in raising capital, I think this is one of the only shows on the particular topic, which sounds crazy because I think 50% of commercial real estate syndication is the capital raising. So go check that out. It's really fun show. I have high energy, just like you heard on this show, man. I have a lot of fun and it's a blast. It's very educational and informative. Just find us wherever you can find podcasts.
That's good stuff. That's good stuff. So check out Ruben's capital raising show. That is going to, tremendously help you in your capital raising. He shared a lot about strategies on capital raising. He shared about build to rent, just his journey of getting into the real estate space and being where he is today. So thank you to the listeners for tuning into today's episode of the Mogul Marathon Real Estate Podcast. Let's take action, be great today. And remember, real estate is a marathon, not a sprint. So thanks again, Ruben.
Awesome. Leave Yannick a 5-star review, guys. Peace and strength.
Thanks a lot.